Hi there guys, I hope you're all well and welcome back to another video on the DVS channel. So this is going to be a video on how to approach your FTMO challenge or any other prop firm that you decide to go with. For myself and Jack, obviously our preference is FTMO in terms of prop firms. They've been around the longest, they seem to be the most consistent, and we've not had any problems with payouts. So that is who we're going to do the video on. I don't want to take up too much of your time, so we will get straight into it. There's three things that I want to go over, and obviously how to formulate a plan. So the first thing, we'll just quickly go over benefits of FTMO and other prop firms. So it's a small risk for a high reward. So for example, with the sign-up fee, let's say you are interested in gaining $100,000 of funding. That would cost you about $480. So for that reason, it's quite good because obviously this is assuming that you do end up passing the challenges, but for £479 or dollars, you can get the equivalent of $100,000 worth of buying power. So if you are in a situation where you do have obviously a profitable trading strategy, you're consistent, then this is obviously going to be great for you. Following that, it's a good way to quickly build personal capital. So obviously, not everybody has $100,000 or £100,000 lying around to put into a live trading account. So for that reason, this is what the main benefit of a prop firm is. You can, for example, get 100,000, 200,000, etc. in a trading account. And then obviously with them profit splits that you get, you can then quickly build up a personal account to the point where you actually don't even need to use a prop firm. As well, there's less emotion. So for example, if you have $400,000 of FTMO money versus $400,000 of your own money, which are you going to be more comfortable trading? Which are you going to be less emotional attached to? Because at the end of the day, going on to the next point, if you have maxed out your FTMO challenges, it's like $400,000 of funding would probably cost you about $2,000 roughly. So if you think, if you lose a trade on $400,000, let's say you're risking 1%, so $4,000 risk, you actually haven't lost anything in terms of actual money with FTMO. If you have $400,000 in a personal account and you lose a trade at, let's say, 1% risk, then that is a $4,000 loss. So your one loss on the personal account has actually cost more, nearly double, what it would cost you to get the 400,000 funding in the first place. So that's one way to look at it. So in terms of the actual emotion and the actual money itself, obviously if you do lose a trade with live money, it's going to affect you a little bit more than when you are trading FTMO funded money. And then finally, just your profit splits. Obviously, 90% of the money that you make on the challenges you will keep. So for that reason, it is more beneficial. It's pretty much like trading a live account because instead of doing 100% of the money, you're getting 80 to 90%, and that's obviously something FTMO do. So they are the benefits of prop firms. We'll go now into trading plans, why they're important, and then finally we will go over exactly what your trading plan needs to look at your approach to FTMO. So regarding trading plans, the importance is being able to trade in a structured and calculated way. You want to be coming to the chart in a morning or in an evening, whenever your trading hours are. You want to know exactly what you're going to be doing. What am I going to do if this happens, or what am I going to do if that happens, so that this minimalizes the emotional trading decisions that you have to make. The biggest thing with trading is probably, they always say 80-90% of it is actually psychological. So when it comes to making decisions, you want to already know and be prepared for what the market is going to do. You don't want to be in a position where you're making emotional trading decisions on the spot. So for example, this is the approach I really like to have, is almost compare it to a diet plan. So if you have followed a strict diet plan before, whether it's in terms of your health or your fitness, this is pretty much what the turning point for me was. I stuck to a strict diet regarding the gym. I lost a load of weight, and because of that, I transferred that over into my trading, and I realized, well, if I stick to the diet plan, I do everything, I get really good results. The minute I deviate from the diet plan, I may go out for tea, get a takeaway, something like that. Even little stuff like that, it is a setback in your journey to getting to the end result. So when it comes to a trading plan, the biggest thing that you want to be looking at is just seeing, right, do I have rules to follow? And do these rules ensure profitability? If they do, then that is a good plan. If not, then you need to look at it. So as well, it optimizes your results like a journal. You can see what works, what doesn't. This is the biggest thing for me because I know, for example, trading overnight is not profitable for me. I've backtested 2 years worth of data and I know by keeping trades overnight, they are not profitable. Therefore, I will not keep pendings overnight. Little stuff like that can be a huge difference whether a month goes good or a month goes bad. And with it being a month, that's pretty much your FTMO challenge. Finally, trading plans. You are treating your trading as a job. So for example, for me, it's an 8 until 5. Within them hours, I'm pretty much focused on trading. You need to treat it as a job or a business. It's not something that you can just half-heartedly do and expect to get good results. A lot of people think trading is really quick money. It's not. It takes years. Some people it might take months depending on if it naturally clicks for you. But for most people, it's at least a couple of years of a journey before they finally get to where they want to be, and sometimes just getting to being profitable. So then finally, let's look at the trading plan. Let's look at what we need to have in it and exactly what you will need to do when approaching your prop firm challenge. So firstly, strategy. Do you have a strategy that is tried and proven, that has consistently got you results? If the answer is yes, you're in a good spot. If the answer is no, then you need to be looking at a strategy, whether you go to someone to be educated, whether you find one for free online. You need to have a strategy that you know has worked for you in the past. There's no point buying an FTMO challenge and expecting to get funded if you can't consistently make money outside of a challenge. Whether it's demo, whether it's live, it doesn't matter. As long as you have a strategy that you can follow and trade from, then you are going to be in a good spot. As well, we've got the trade management. So, what is your stop loss going to be on trades? Is it going to be based on structure? Is it going to be a fixed stop loss? For example, I like to use a 50 pip stop loss, whereas some pairs a 30 pip stop loss. With TPs, some pairs I'll target 100 pips, some pairs I'll target 60 pips. So I already know before I get into a trade exactly what my stop loss will be and my take profit. And that way, once again, I'm not making emotional decisions. I'm not getting into a trade and thinking, oh, if this trade wins, it's going to pass me the challenge. It doesn't work like that. Have a set trade and plan and treat each trade as a separate thing. And then when are you going to go break even? Are you going break even at 1-to-1? Are you never going break even and just letting the trade hit stop loss or take profit? These are the things you need to be taking into consideration when you are trading. The next point I briefly mentioned regarding my hours, obviously between like 8 and 5 o'clock, your trading hours. If you are, for example, a price action trader and you do need to be on the screens quite a lot, what hours are you going to trade? What sessions are you going to trade? Are you going to leave your pendings overnight? As I mentioned, for me, this is not profitable for me. Some other people, it is. It just depends on the person, and this is why your journal is obviously important. So pick the trading hours, pick the session, and then from that, you can switch off outside of your trading hours. Fundamental adaptation. So are you going to, for example, trade on days where there's high impact news? Are you going to go break even on a trade? Obviously, with the challenge and the verification, you don't need to avoid restricted events on the news like interest rates, NFP, etc. But as well, it's going to move the market a lot, events like that. So do you want to be risking your money, even on a challenge, on a trade which could potentially go majorly wrong? So that's something to look at. How are you going to affect the news? What's it going to do to the market? And how are you going to adapt to that? Probably the most important thing on here is your risk. What are you going to risk a trade? FTMO and prop firm challenges are not made to be passed. So most people will approach it, or 0.5%, 1% risk, that's what I'm going to do. For me personally, in my experience, this is not the way to pass a challenge. Once you have a strategy like so, which works, that is when you can potentially look at, right, I'm just going to look at the more high probability setups and then risk a bit more. So for example, in the past, I have risked anything from 2.5% up to 4.5% on trades that I am very confident in. Because obviously the daily loss is 5%. So if I can risk 4.5% on a super good trade, then you're in a good spot. But obviously that depends on you. But from experience, 0.5% to 1% risk, it's not personally worked for me unless you have a very high risk to reward and good consistency. And then finally, what pairs are you going to trade? Are you going to trade all pairs? Do you have only a couple of pairs that you have mastered? All these things come into consideration when you are looking at putting your trading plan together. So that was just a few sections there. In the upcoming content, there is going to be a bit more of an in-depth, exact how to formulate a plan, but these are basically the brief points and probably the main points that you need to look at when you are formulating a plan. As well, I just want to say that we've got to this point of the video. If you are still watching, we do actually have a discount code for the analysis group. So with this, if you are interested in that, message myself or Jack on Instagram. The links will be in the bio. What we've started doing, if you get to the later points in the videos, there are going to be discount codes and stuff like that provided just as a thank you for making it all the way through the video. So obviously if you are listening to this now, then you can message us and find out what there is. But yeah, there is 25% off the analysis group if you message myself and Jack on Instagram, just based off this video. So that's something to keep an eye on. The free group will also be in the bio as well if you are interested in joining. Any questions at all, just leave them in the comments of this video. But thank you very much for tuning in, and we will see you in the next video.